The guns may have fallen silent, but the shockwaves are still rippling through the global economy. Following Donald Trump's sudden announcement of a ceasefire in the US-Iran conflict, the world breathed a collective sigh of relief, and nowhere was this felt more immediately than in the oil markets. But with the dust settling, the question on every investor's mind is, will this sudden drop in oil prices actually last, or is it just a temporary calm before another storm? Almost immediately after the ceasefire was declared, we saw a sharp stabilization in Brent crude and US oil futures. For weeks, the threat of disrupted supply chains through the Strait of Hormuz had baked a massive war premium into the price of every barrel. With hostilities paused, that premium is evaporating. Traders are rapidly unwinding their panic-bought positions, bringing much-needed relief to global energy markets and easing the immediate fears of skyrocketing fuel costs. However, market analysts are warning against premature celebration. The ceasefire has halted the fighting, but it has not resolved the deep-rooted geopolitical tensions that originally sparked the war. Economic sanctions remain a complex web, and regional infrastructure may still be highly vulnerable. If the fragile agreement collapses, or if either side feels the terms are not being honored, we could see an immediate and violent spike in prices. The market remains incredibly sensitive to any hint of renewed escalation. For the average consumer and the broader global economy, this pause is crucial. Lower oil prices mean reduced transport and manufacturing costs, which could help ease the ongoing pressure on global inflation. Yet, energy security remains a top priority for governments worldwide. This crisis has served as a stark reminder of how deeply reliant the global economy is on Middle Eastern stability. Moving forward, expect to see nations accelerating their diversification of energy sources to shield themselves from future geopolitical shocks. The war may be on hold, but the energy market is still walking a tightrope. While the immediate panic has subsided, a single misstep in the region could easily trigger another massive price surge.